Well, meanwhile, the Reserve Bank of India, in a fine balancing act between boosting growth and reining in inflation, came up with several measures on Friday. And this comes amid high inflation and a shocking slowdown in the economic growth of the country in the previous quarter.
The committee decided by a majority of 4:2 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate at 6.75%. The MPC also decided unanimously to continue with the neutral stance and to remain unambiguously focused on a durable alignment of inflation with the target, while supporting growth.
The central bank, though, cut the cash reserve ratio, or the CRR, which is a percentage of money parked with the RBI that banks lend. This was the first cut to CRR since April of 2020 and was made to infuse more liquidity into the system through bank lending. This raised its inflation forecast for this year to 4.8% from 4.5% previously. At the same time, the central bank cut its growth projections 6.6% from the earlier 7.2%. Adil Shetty, co-founder and CEO of bankbazaar.com, calling RBI's decision a fine job of balancing inflation controls with economic growth, said, and I'm quoting him here, "The RBI cutting the CRR by 50 BPS for the first time since April of 2020 signals the direction of monetary policy. And while key policy rates are unchanged for the 11th straight time, the stars are aligned for a potential rate cut in February." He added that we still need to look at the global trends as inflation remains volatile. The RBI has done a fine job of balancing inflation controls with economic growth. Now, in other measures, the RBI increased the deposit ceiling for non-resident Indians to support a record weak rupee. Despite the rupee's fall to repeated all-time lows, Das said that the currency remains stable compared to the country's emerging market peers against a resurgent dollar. To further develop the interest rate derivatives market in India and improve the credibility of interest rate benchmarks, the Reserve Bank proposes to introduce a new benchmark, the Secured Overnight Rupee Rate. And this is based on all secured money market transactions. The RBI Governor Das also said that central banks were put to test amid geopolitical tensions and financial market volatility over the last year. However, he said the health of the financial sector was at its best, with the financial parameters of banks and NBFCs pointing to strength and resilience. Separately, the governor announced that the RBI will set up a committee of experts to suggest a framework for the responsible and ethical use of artificial intelligence. For all the latest news, download the WION app and subscribe to our YouTube channel.